Welcome to the Craig Brock Real Estate Show, helping you navigate through all the challenges and pitfalls related to real estate. Craig is San Diego's real estate investment strategist. And now, here's Craig Brock.
We're 35 minutes into the trading day here in the U.S. What a morning it's been already. We've pierced 2.5 on the 10-year Treasury. That's right, this morning interest rates at 2.49%. We have the 30-year bond that's coming in at 3.36%. Hallelujah. We've got our party hats on here at Rancho Financial on the mortgage banking side. This is big news. You have to go all the way back to last October of 2013 to get to this level for mortgage rates, for interest rates in general. And then you have to go back even further. You have to go back almost a year to where we were at this level, which would be July of 2013. So this is significant indeed. What the heck is causing it, though, this morning? We have stocks that are off. There was some news out earlier about a famous hedge fund manager that he had some choice words about saying you can't be long. I'm going to rephrase what he said because this is live radio. But you can't be long in this market. You have to be really careful. And so that has investors scared. Other news is breaking is home builder confidence. Home builders are losing confidence in the recovery. A monthly confidence index from the National Association of Home Builders slipped a whopping 1 point after a downward revised April figure. But this is causing money to flow into bonds. When money flows into bonds, mortgage rates are lower. But not everybody's cheering because people are worried. They don't know what to do with their money. I mean, just look, there was a report out the other day about how the Chinese are buying alfalfa. That's right. We talked about commodity prices. They're buying alfalfa out here in the Imperial Valley east of San Diego, and they're actually putting it on a ship and shipping it back to China. So they've got product there to feed their cows. But we want to get into what the Chinese are doing to our real estate market. And it's not just the Chinese, it's the Canadians, it's people coming from Mexico and all other places. There are opportunities for them to get into a home without having to pay cash. And that's why we're going to talk to Terry Lewis. Good morning, Mr. Lewis. Thanks for joining us here on this Bloomberg Network.
Good morning. Thanks, Craig, for having me today. It's a beautiful day, even in spite of all these fires that are going on in San Diego County.
Yeah, absolutely. We're thankful for everyone, for the firefighters getting the upper hand on it, which appears to be the case. Now, you're with sellerfinanceconsultants.com, sellerfinanceconsultants.com, for listeners that are just tuning in for the first time this morning. And I know that you have a lot of information to disseminate, but on this volume 3, if you will, we'd like to talk about the opportunity that exists for investors. If you're looking at stocks and you're worried, you're concerned, just like David Tepper, the famous hedge fund manager, is, you're looking for alternative solutions. Perhaps the alternative solution you should be looking at is investing in trust deeds because they're attached to real estate. There's a certain amount of safety, if you will, there because it's tangible. Now, we have to be careful with the word safety, but we're talking about a tangible investment that's different than investing in a stock altogether. But I want to know about the opportunity that exists for buyers that are not U.S. citizens. You're helping many of them out there, and we have a lot of them as listeners because, let's face it, this is the most affluent audience on radio because it's a Bloomberg network.
Absolutely. So we have as seller finance consultants, we do Dodd-Frank compliance for seller financing for owner carry loans, and we have a foreign national program that well, let me give you some statistics first. Between March of 2012 and March of 2013, there was $68.2 billion worth of real estate purchased by foreign nationals, and that represented 6% of the real estate market. Now, that 6% is not very much as a percentage, but it's huge when you're talking about real estate purchases in America. And most foreign nationals can get a loan, but they have to put at least 50% down. Real estate, and so what's happening is a lot of wealthy people around the world, in the Middle East, in different parts of China is becoming very affluent, and Russia, those and Canada, in those regions, people are parking their money here and don't need as high of a return on their investments as they feel that they need to just have protection for their asset. And so in the world, America is the place to go to protect their assets and actually own real estate. They really feel that it's tangible. And so in our foreign national program, we can negotiate with owners that want to carry a loan on their home and be the bank, the same way that a regular person could, and accept 20% down and have the owner carry a loan, or whatever the parties negotiate. And it's a huge program for us. It's just working really well.
That is a huge program. You're talking about 6% of the real estate market in the U.S., and you mentioned 68 billion in transactions. That's with a B. You just blew the lid right off the joint here, Terry, this morning with that program. I thought we had the upper end here at Rancho Financial as direct mortgage bankers. We have this terrific foreign national program where we actually use non-traditional credit because, let's face it, if you're coming down from Canada, you don't have a credit report. I just completed a loan not long ago for a dentist, and we actually used his Mercedes lease payment as credit, and we used his phone bill, and we also used another utility bill as well. So we had 3 trade lines, even though he doesn't have a credit report. But of course, there's people that are coming down that don't have any credit. They don't have any car lease whatsoever. In that kind of a scenario, we would just simply use your water bill, your electric bill, and what other bill that we could find. Maybe we'd talk to your landlord, or we'd just simply get a letter from them. But we would be at 50% loan to value. What you're talking about here just puts me to heck. You've got a scenario where you can go higher on the loan to value ratio, which means less money down. You're killing me, Terry. I just can't take it when it comes to your foreign national program. That's why it's been so successful here. So for listeners that want to know more information about that want to just get into a home right away, how do they do it? Do they go to the website? Do they call you?
Yeah, they can call us or go to our website at sellerfinanceconsultants.com, sellerfinanceconsultants.com, and just fill out the form, and we'll be in touch with them and have a conversation about what their goals are.
Well, that's just terrific. 8 minutes ago when we started this broadcast, I mentioned that we pierced 2.5 on the 10-year Treasury. We're down to 2.48%. Breaking news, if you missed it earlier, it's just a slowing economy. Shell shock sends bond prices higher. The yields go lower. Global bond yields are in a deep slide, taking the 10-year Treasury to a level that hasn't been seen since last October. Well, boy, that is just fantastic news for anyone buying a home or refinancing a home. I'm on an advisory board, and I made some comments last Thursday, a week ago today, and some of my colleagues actually had some comments about my predictions, and the scenario was I like to take the fiduciary role. I like to do the best thing for the customer. I like to have some insight, though, and I show you in full transparency what I'm basing my decision on. One of my fellow mortgage bankers actually chimed in last Friday. He said, if you've got the deals to lock them. He basically said, if you've got them, smoke them. We're not going to smoke anybody. We want you to get the best deal. I said, no, I'm going to float. Well, look what's happened. And not to toot my own horn, but we've got a 2.48 on the 10-year Treasury. So I take all of the information available and analyze it. Now, I've been wrong many times, but this is a beautiful setup here on the 10-year Treasury. So we're getting pretty excited here at Rancho Financial. But back to Terry Lewis, who can help you get into a home. Terry, there is an opportunity for people that are scared because, let's face it, even though I'm pretty cheerful this morning, investors are scared because money's moving into bonds. They're looking for other opportunities other than equities. They're looking at what you have to offer. You have something that can sustain over time, making money in real estate, investing in these in these individual notes. I can't call them mortgage-backed securities. I know you'll probably get there eventually, but for now you're investing in notes, correct?
Yes, and actually, that's a great subject. You know, investing in a note is something that's tangible. It's secured against a property. An investor can actually buy a note um, on the open market the same way. Let's say you win the lottery and you know you have an option of taking a lump sum payment that's at a discount after taxes, and or you get to have the money over a long period of time, and the amount of money that's there is the same. So an investor is actually buying a note at a discount, potentially, well, not potentially, but that usually happens, is and what they're buying is the cash flow going forward. And there's some really good deals out there for doing that. And it's you know, it's a way of securing a future cash flow without, you know, having to watch the stock market every day and wondering if they're in the right place or if they're in the right stock or if they need to go to bonds. Actually, this cash flow of owning a note is a bond. It's it's how bonds work. And but instead of getting a yield of, you know, 2%, you can get a yield of, you know, 10, 15% at a minimum. And it's a tremendous way of looking at things and a huge return if you know what you're doing.
Because of the discounts. Now, I want to quantify what you're saying there because I don't want to scare people that are wanting to get into a home with this strategy. This is the investment concept of seller
Correct.
finance consultants. The way that this works is that in order to affect that high yield, that higher yield, that double-digit yield, is what has to happen is that there has to be a component of discount. Now, I'm not going to get into that on this broadcast because there's a lot to know about that, and I know that you have a computer software program that actually calculates that, and you'll do that when people call the office or when they have a scenario and they want to see what it's going to look like for them. But there's that discounting mechanism, and that's the beauty of this transaction. That's what increases your yield substantially, is because you do have this discount mechanism. And the way this works is that if you actually sell a home with seller carryback financing, and let's say you sell it for a little bit more than the market value, because hey, that's kind of what this is about. You're going to charge a premium because of the luxury of the seller financing and not having to go down to the box bank. Because when you have to go to the bank, you have to show a lot of paperwork. Even when you come here to Rancho Financial, hey, you do have to show a lot of paperwork in order to qualify. And let's face it, if you have a paving business or some other kind of a construction business and you've got big heavy trucks and you take a lot of deductions or you write off your life on your Schedule C, you might get down to that bottom line, that adjusted income, that line 37, and the Mr. Banker might say, sorry, you're out of luck. Well, it's different when you call seller finance consultants. And for the seller of that property, they're going to charge a premium because they're allowing you to get into that property. But some of these sellers might need money down the road, 6 months down the road, maybe a year, maybe several years. They either change their mind or they need money for a medical condition. That's when they come to Terry Lewis and they say, Terry, I've got this note. What can you do for me? Well, that's when Terry goes and runs his algorithm and finds out what the buy would be for this particular note. And then he's able to offer a cash payout, a cash settlement. There's a lot more to know about this, and I don't want to simplify it too much because it is a complicated strategy, but it's the way you make money. You make money like bankers. We've been talking about arbitrage here on this program for years. That's how banks make money. You can do something very similar when you know Terry Lewis. You have to check out his website. Terry, you've got a new website. I was looking at it just yesterday. It's terrific. It's really intuitive. sellerfinanceconsultants.com.
Yeah, thank you. We updated it, and we're actually going to be starting a national program for underwriting, not just California. So we're gearing up for that to announce in the future. And you know, I have to say, even a seller that carries a loan, let's say that their life is great and they need some extra income and they sell their house at a premium, you know, carry a good, have a good note with a good cash flow that's going to supplement their incomes. People have things that happen in life, and in some cases, someone's going to say, you know what, Terry, we carried this note and it was great, and here it is 2 years later, and we need to get, maybe it's $100,000 note, and we need to get about $40,000 to pay for some medical bills or to do something. You can actually borrow against that, and that's where the investor comes in, and they can either borrow or they can lend based on the cash flow of the note, or like we mentioned earlier, they can actually buy the note at a discount, which is where those yields come in. But there's a whole market for this, and even a seller that carries a loan and says, well, I can't carry the loan because I might need the money in the future. Well, you can take advantage of carrying that loan back at a really good interest rate, selling your house at a really good price. And if that event happened in the future, there is a way to get cash from that loan, and so it's not a big risk like people might think it is.
Well, Terry, I have to ask you the really hardcore question here, because let's face it, when you have money moving into bonds, like is the case this morning, 286 on the 10-year Treasury, I love it. It's really setting up great here, and it's kind of what some of us thought with esoteric thinking, against the grain though, because we kept hearing that mortgage rates would be higher this summer. But Terry, the question is here: what happens if someone is in one of these homes and they don't pay their payments? What do you do?
Well, you're getting enough of a down payment to be able to actually foreclose on the house, and that's really the remedy. And so you're gonna miss some payments until that gets remedied, and foreclosure is the way to do it. And it takes 3 months, 20 days at a minimum to do that. Foreclosure is something that's been happened in the past in this downturn. But historically, if you get enough of a down payment on a house and the economy has stabilized, that's not necessarily, something that happens all the time. It's a risk, and it's a potential risk. But when you're talking about a 2.48 bond yield versus 6-8%, or buying a note at a discount, or lending as an investor against a note at an even higher yield, personally, the risk and reward, they match, and I have no problem with it.
Sure. You're paying a little bit more interest because of the potential for risk, because there's some hazard there. But that's perfectly understandable. Just look at the people out in Rancho Bernardo. They're paying $5,000-$6,000 a year for their homeowners insurance because they're in these areas where there's been fire. And now, of course, we're seeing it again happen. And unfortunately, it's not going to get any cheaper for people looking for insurance in these areas where there has been fires. But so you're charging for risk, and that's okay. And as long as investors are aware of that, I think that's the main thing here. There's a component where if someone didn't pay, you could simply take the house. You could take it through foreclosure. Jerry, I do appreciate you explaining that there is the collateral there. It's probably very rare that you would have to go through this procedure. We actually had Rob Porter on from Charger Funding just recently. He's the private money lender, and he hasn't had any foreclosures in years. And it just amazes me because he's got one of the biggest institutions here in the Southland that does private equity funding. It just shows you that if you underwrite correctly, if you do the right thing, then you can mitigate some of the risk. Terry, I want to know about the opportunity to get into these properties. I know that's typically our Volume 1 show. We spoke about that earlier in the week. I made mention to properties that are, they're in Rancho Santa Fe, Del Mar, Santa Luz, La Jolla. But there's also properties available in other areas. There's properties available in Vista, Valley Center, Yucaipa, all over the place. I even saw one that was in 29 Palms for $84,000. $35,000, chances are there's one of these seller finance properties in the area where you're looking, and you can get into it with 10% down, correct?
Absolutely. The price has nothing to do with seller financing. It's what the people are needing, and so you can have seller financing for a mobile home, or you can have seller financing for a Rancho Santa Fe house. So the values have nothing to do with the people's or the customers' needs to get a better price, to that they don't need the cash, they don't want to pay taxes. There's all these different reasons why they would want to sell a house and carry the loan, or buy a house and have the seller carry a loan. And these needs are just being matched by the buyer and the seller, and what they do in the process. And we're the middleman that finds the property. We negotiate the transaction, and we also underwrite the loan so that it's compliant now with the Dodd-Frank Act that was passed in 2010. And we're really, really having a lot of success.
So this is done totally professionally with all the proper documentation as anybody would want it to be done. Now there is that fiduciary, that middleman component that collects the payment. And we just have about a minute here, Terry, but it's all handled appropriately. There's essentially like an escrow set up to transfer the cash, so there isn't any risk for either party in this transaction. So whether you're looking for a home in Fontana or Palm Desert or Pasadena or in the San Diego market, it really doesn't matter where it is. It doesn't matter what the price is. Let's face it, some people want to be private. We had somebody in our office the other day that owns a startup vodka company, and they want to be below the radar. That's why they're looking at this opportunity for them. Terry, for people that have property that's underwater, real quick, what do they do?
Well, we have a program for that as well. In a lot of cases, a buyer is willing to pay more than what the property maybe typically is worth, at a percentage level, and they're willing to take over that person's loan, and they have home ownership. They have really good income. They need a tax write-off, and the net of their payment is really less than what the current homeowner is experiencing, and that's a problem that's solved as well by seller financing.
Problem solved. We appreciate that, Terry. Well, thank you very much for your contribution this morning on Financial News and Talk.
Yeah, thank you. Absolutely.
Terry Lewis, his website is sellerfinanceconsultants.com. His phone number is 619-786-5550. And I'm Craig Brock, mortgage banker here in Southern California. I can help you with all things financial. And if you have one of these underwater properties and you're sick and tired of it, I urge you to call Terry Lewis because he can help you out. And if you want to get into a home, you want to be under the radar, he can also help you get into your home with the seller financing strategy. Call him today, sellerfinanceconsultants.com. Have a fantastic day.